Now we need to see when this criterias, I mean to say 5 criterias of identifying the contract's existence needs to be seen. This will be answering when. So effectively let's try to understand that through example. So in case 1, let's suppose that criterias are met at inception, like Microsoft Office 365 subscription has been taken by a person and the contract is being signed for 12 months, and all the 5 criteria are being satisfied, that approval exists, rights exist, payments terms exist, commercial substance is there, and finally probable collection is there. Since all the criteria are met, no reassessment is needed. So Microsoft won't reassess again that will the customer will be able to pay or not, unless the contract is modified. So if there is a change in contract, for example, the customer says that I need additional extended term for these Microsoft license, or they say I need Power BI along with Microsoft Excel, or there are certain other changes or additional services. So once a reassessment, or I can say assessment, is done at the inception or start of the contract, then again no reassessment is being done. In the second case, reassessment is required based upon change in circumstances. Let's take the example of company Tesla, which is doing vehicle financing. Now a customer signs a financing contract to buy a Tesla. Now they are going to buy the Tesla car. At the inception, when the contract is signed, all the criteria are met, meaning that there is approval, there is rights, payments, commercial substance, and probable collection as well. Now in the midway, let's suppose this contract was for 20 years. Generally it won't happen for 20 years, but for example let's take it for 20 years, and after 3 years the customer become bankrupt and he won't be able to pay the Tesla's remaining EMIs or installment to the financing bank. So what will happen if the customer defaults on payment? Tesla agrees to restructure the financing, or we can say they will be reassessing their collectability, that whether all these 5 criteria are met and when the defaults are happening. So in the case of default or change in circumstances, reassessment will be done. The third case is like when the criteria are not met initially, then reassessment will be done altogether throughout. What does it mean? For example, a software startup company has started a contract with a customer in a developing market. Now the market is growing. At the inception, what has happened? The probable criteria for collection is not met because the customer financial condition is weak. So basically, if the customer is not able to pay initially only, then the company providing the services won't recognize the revenue, because in that case even if they recognize the revenue, they may recognize the bad debt as well, because they won't be receiving their money. So in case initially only they are unable to identify all the criterias, then they will be doing regular reassessments. So after let's suppose 3 months, they will be checking, okay, if the customer become financially sound now, then if not, after 6 months they will be checking if the customer has become financially sound now, and if the customer become financially sound after 9 months, then they will stop checking again and again, and finally they will recognize the revenue. Then similar thing is written here: if the customer later secures funding and collection become probable, revenue recognition begins. So effectively there are 3 different situations, that when, the important question to ask here is when. First is if the at the inception criteria are met, you are okay. If the inception criteria are not met, then you need to reassess every time, and after inception the reassessment is required if there are changes in circumstances. Based upon that, the textbook definition is given here. Now The assessment of contract criteria is performed at the contract inception. Every time at the inception, we will check if all the 5 criteria are met. If all the criteria are met, reassessment is only necessary when significant changes occur, which we saw here that all the criteria are met only if there are changes in significant circumstances or extended terms or additional services, then the reassessment will be done. Second, if the criteria are not met at inception as we saw in above case, the entity should perform regular reassessment every quarter, every month or every year, whatever the case may be. They will be reassessing until the criteria are met or satisfied.